Hello viewers, in this video I'll be going over gold miners, ETF ticker symbol GDX. Today we are up 11 basis points on the 1 hour chart. We were very close to touching the overbought RSI. We start to see a divergence forming in the 1 hour MACD. We are currently at the 9 and 18 moving average support. As for the 4 hour chart, we approach positive MACD and there may be possible, I would say we may head on higher, but the real test will be breaching above the 200 moving average in the next coming days. As for the daily chart, we made a nice convergence. However, the daily MACD is still negative. Ideally, we need to see it turn positive, and at the moment, we still are finding support around the price of $26.20, and that price still act as support since I was considered early August, back in September 13, September 30th, October 16, and this month, November 11. So at the moment, I do see us currently at resistance, as this was resistance back in between November 1st and October 31st. We do need to see a close above the 50-day moving average, this yellow line. And since we're very close to it, there's a good possibility we may break out and close above it. So our first immediate resistance will be around the price of $28, where we left off back in early, or I should say October 31st. That price also coincides with past resistance back in October 11th. So that is our next resistance. And as for support, we do see the 150-day moving average is closely averaging higher and higher. Eventually, we may touch it if we were to reverse and head down lower. That price movement is roughly around, or price is roughly around $25.80. So if we were to move down lower, that price movement is roughly 5.2% to the downside, and to the upside is around 3.1% to the upside. So the forecast model is now available in the link below, so do check it out. If we click gold miners, and we have now JNUG and NUGT and JDST. So if we configure the settings, and you can get the results displayed on the models that were overviewed in this video, so do check it out. Again, it's in the link below, so do check it out. So back to the forecast model, I'll go day by day, where gold miners will head to next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to September 7th to December 1st, 2017. So let me point out why these two charts are similar. So what we have in the current trend, we start off touching the upper Bollinger Band, and then we proceeded to break down, touch the bottom Bollinger Band. We have our first instance where we touched the bottom Bollinger Band, the second instance right here, and finally the third one is right close towards the end, and right in between we see it revert back to the mean to touch the middle Bollinger Band right here. So we see those points displayed on the current trend. So back to the trend in question, we started off touching the upper Bollinger Band, and after touching the upper Bollinger Band, we touch the bottom Bollinger Band several times, and that is our first instance. The second instance is halfway in the trend, and then lastly, right towards the end, right there is our third one, and then let's mark where it revert back to the mean to touch the middle Bollinger Band. So what we have is about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was September 7th to December 1st, 2017. Back then, gold miners continued to fall roughly around 4.9%. So there's a possibility gold miners may head down lower in the next coming days. So if you enjoy this content, feel free to like, comment, subscribe. And once again, this forecast model is now in the link below, so do check it out. And thank you for watching.